this market is still in a very strong downward trend. High, lower high, lower high, lower high, lower high, lower high. We want to be going with the market. We do not want to be fighting the market. Remember, the trend is your friend until the end. We need to respect the market. If you're trying to go long this market right now, you're probably going to get destroyed. Don't place a trade based on what you're seeing in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, there's actually a bit of weakness still in the drop today that happened in the stock market. Remember I said in yesterday's video that I'm actually expecting a little bit of a drop in the stock market. That's exactly what happened. If you heard me talk about the actual gold market as well too, how that was probably going to get a drop, and that's been happening for the last couple of days. So the analysis is pretty much spot on for what's going on right now with these markets from here. So one thing I'm looking at here from an actual market from here, we're looking at the mining sector right now, and gold and silver. Again, there's something really weird going on here. Anyway, so on an update for the stock market, let's start off with the Nasdaq first here. So the Nasdaq, you can see here that it actually ran up and we went sideways. And yesterday's update, I talked about how, one, we're right at this level of resistance here. But secondly, I talked about this hourly chart here, and I said that if we do get any upside movement, okay, let me actually take everything off the screen here for a minute, and I'm going to bring up this chart here. And this is something, traders, that I really want to help you out here when trading the markets. Okay, how can you spot a false breakout in the markets from here? And oh, by the way, traders, if you are interested in joining my whole coaching program for all of 2024, for over 12 months of daily coaching with me every single day, then I've got a couple of spots left open. If you can apply for that, that's second link in the description there, guys. This is daily coaching with me, every single market open. You see what I'm doing? I'm coaching you every single day. If you're struggling with your trading right now, guys, and you really need some help, then that second link in the description, go click on that, go book a call and fill out the application form, and I'll call you. And again, this is for all of 2024 for that coaching there. Now, let's actually go back to what I was talking about here before. I want to teach you guys a few things here that I think is really going to help you in your trading. Whenever you get a market that does a really big move or a nice move in any direction, it goes up and up and up, and it does something like this. What you are going to expect is that if you see how the nature of markets work, the market's going to go through a moving phase, and then it's going to go through a pullback or a resting phase, right? So and then guess what? The market creates these patterns. It goes up, we get a pullback, it goes up, it may go sideways for a bit, and then goes up a bit, right? So when the market goes up, the market inevitably will go through what? The market will inevitably go through either one or two things. It'll go through a pullback phase, which or it may go through just what's called a resting phase, a pullback phase, a resting phase. But as you can see, right, the trend is still up. This is making higher lows, and away we go. Right? So the purpose of me saying this is by looking at the smaller swing, or just looking at the swings of any market, is that if the market does start to make a really big move to the upside and we start to get too overextended, we may be here, we may be here. It's important, right, that we need to be expecting that, okay, we've been going up for a long time, right? We've been going up quite a bit now. And this is where false breakouts happen. If you're looking for a false breakout, complete false breakout, then this is where you get the false breakouts, because the market does this. It may hold here, and then it rallies and it opens up through there. It might give you a breakaway bar and then completely reverse on you. This is when false breakouts happen after we've had very big moves to the upside. Makes sense? So the purpose of me saying this is that if you notice on yesterday's update, I talked about this with the Nasdaq. I said, traders, if the market does break to the upside on this Nasdaq, it's probably going to be short-lived and it's going to be a false breakout pattern. I'll be looking for more of it. And if there's actually two things here. If we do get something like that, then where's it coming from? It's coming from what? It's coming off the back of just basically doing this through here. And then we have that through there. right? If we did get something like that, then this move to the upside, which so many people will get sucked in because a lot of traders who don't understand these markets don't understand that this is what's probably likely to cause a false breakout. I'd be looking for a short setup here more than anything. Why? Because there's going to be a massive probability we're going to be looking for something like that, and then at least getting a pullback. Now, guys, when I say false breakout pattern, pullback, I'm talking about an hourly chart here, right? And a pullback is just a pullback, right? We could get a pullback, or we're actually getting it right now, as you can see on this hourly chart, right? We're now starting to break down past this level here, and you actually can see it definitely tried to break up above here, didn't it? But then we actually got the reversal here. So looking at this level now and going back to the actual daily charts itself on the Nasdaq here, we can actually see that we can see here that we actually got a breakdown bar, and now it's actually breaking down past these levels of support. We're actually right at this level of resistance here. So there's probably a good possibility now we're going to start to make at least another bit of a move to the downside. Then we need to see what happens, because if the market is going to be strong for December, we will then create what? We'll create a higher low, and then we'll start to do something like that. If we do start to get this pattern, if this is the if scenarios here, is if we do get this pattern from the Nasdaq, then we could expect to see a very strong December. But if we don't, and we really start to get below what I call the mid-range of the weekly bar, and that's this bar through here. So you're looking at this bar through here. In fact, let me bring up the candlestick so I can actually show you what it looks like just a bit more clearer for you guys to see it. The mid-range of the bar is where? Right, is around this, and the reason I'm doing this is because you can see here, right? You can see all the support, and then the resistance through here. So that's that level. If we cannot hold this level over the next, say, 1 or 2 weeks, there is not going to be any Santa Claus rally. It's going to be Santa Claus dumpy, right? Santa Claus, he couldn't get off the toilet seat. Right? And by the way, traders, if you do like this sort of stuff and you want more training, you actually want to learn my trading system for free, learn good chart reading techniques like I'm teaching you here right now, then I'm giving away a free trading course. That first thing in the description there, you can go get that. And you actually, and again, in that trading course, I teach you my trading system for free, which is the best trading system out there. And once again, traders, if you do really need some help when you want to make 2024 the best year ever, then that second link description, apply for my 12-month, all of 2024, every single day the market's open. It's me and you coaching, you're seeing what I'm doing, and so on and so forth. This is intensive, but if you're ready to go, guys, that is going to be for you. If you really want to make 2024 the best year for you, then that is for you, because it's every day the market is open. I'm with you for at least an hour every day to help you and coach you. So we can see what's happening through there on the Nasdaq. So let's go back to the... now let's go back to the S&P 500, and we see what's happening with the S&P 500. Now, once again, yesterday on the S&P 500, I'm just going to this here, I talked about how the market is starting to slow down, right? It's slowing down. And no one definitely knows what's going to happen, right? But I was saying there's a good chance we're going to start to go up, slow down, and then roll over, right? And then that's exactly what we started to get. We actually got a bit of an open up, and then we came down, but right at this level here. So I'm expecting to see now possibly a little bit of a short-term pullback out of this level here. Not too much of a pullback. Not too much of a pullback. Now, looking at the market right now, there's 2 scenarios that I'm actually watching for when it comes to this S&P 500 chart. There's 2 scenarios here, okay? The first scenario is exactly what I just said there a minute ago. The first scenario is we get a drop to the downside. If that happens, I want to see, does this whole major level here become support over here, right? See how it became support and support. If that is inverted head and shoulder, yada, 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 right? Then a higher low. If we do get something like that, and then we create something like that, this is scenario number 1, right? If we do get something like that, then we're going to see a really strong movement to the upside. Now, if for some reason we don't get that, and let's go look at this hourly charts. If for some reason we don't get that through there, and I'm looking at this, I'm just looking at this from this perspective here, I can see how this whole level, right, all through there, and all through there, which is 4,380. Notice that point through there, right? That's that level through there. If indeed for some reason we don't get any pullback at all, and we just completely just do something like that, what does that mean? we're not even probably going to get a pullback. And we're probably likely then to start to see a move back up towards, I would say, this 4,500 level. It looks like a level through there because the pullback's not even going to happen, right? And then it's probably going to have another strong move to the upside. What you would want to see, though, is you'd want to see like a little bit of a pullback first. But right now, the market is rolling over. So they're the two different scenarios. If we do get a drop, what happens? Because remember I said before, and then this is the weekly chart here as well too. And that's that mid-range that I'm looking at there from that perspective there. Let's go look at the Dow Jones. And the exact same thing I talked about here on the Dow Jones yesterday is what? The market's gone up, then it's slowed down, and now we're rolling over. So we're probably going to get a bit of a drop through here. But what does that drop create? Does the drop create a very strong drop? Or is it just a pullback to create that higher low and then away we go from there? So there's a couple of different scenarios that I'm watching for right now when it comes to the good old stocky market from there. Moving now through to the Russell. Russell in a strong downward trend. And again, this is where, guys, wherever the trend is, all right, especially when you're using moving averages, like I like to use the 52 moving average on the daily charts. And as you can see, whenever the moving average is strong trending down in a direction, trying to go against that is very, very, very risky. Let's go look at gold and silver. So let's start off with the silver market. Silver's still looking very, very weak, guys. Looking very, very weak. We could not break above this $23.75 level up here. We're still going sideways through here. We would need to see a break above that, this level through here, the $23.75. We would need to see a break above that for us to then start to see we're likely to make a really big move up. If we don't get that and we break down, then silver is getting ready to have another move down. We could start to get something like this here, right? Like that, we get a breakdown, and then we're probably likely to see a move back down towards that $20.75 level, which is interesting, isn't it? It's actually that major resistance there is $23.75. The next major support is $20.75. So isn't that what a quinky dick, eh? It's just the same number, but it's $3 apart. So let's go look at gold from here, and this is the exact same thing I talked about with gold, right? If you look at the Nasdaq, if you look at the stock market update that I did yesterday, it's the exact same thing that I talked about. The exact same thing that I talked about with the overall markets from here, right? You can see here that I was saying the exact same thing, right? Remember I said before, whenever the market makes a really big move up and then we go sideways and it does break up, we're probably going to be a false breakout. We're probably going to get some form of a pullback. So trying to go long on that breakout is very, very risky. And this is where a lot of traders that don't understand this stuff here, this what I call technique, trading technique of never try to get in a long position after it's already made a big move up, because it's probably going to reverse on you from there. So, but now we're getting the pullback now. We did actually break down. That's that level through there, but we did actually break down towards this level through here. So I wonder what that means from an overall perspective here. Are we about to create a higher low? And then away we go. If we do, then it could be very, very, very exciting. Now that's gold and silver there. Let's look at the mining sector. The mining sector is still very, very, very weak on the downside, right? We look at the GDX. We have a high, a lower high, a lower high, equal high, equal high. There's no strong higher lows here, right? Remember, an upward trend, buyers coming in, buyers is higher lows, higher highs, higher lows, higher highs, right? That's the buyers coming into that price. So if we start to get this whole rejection through this level through here, then guess what? Rejection, 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 and then away we go, right, to the downside. So that's basically what I'm looking at there from this perspective here. I would be just surprised to see more downside now to come out of the actual mining sector, because it's still looking really weak. Looking at the GDXJ, and the same sort of thing, right? We're squeezing up to the downside. For any bullish tone here, for me to start to become bullish on a short-term level, we would need to start to get back above this $36 level. We need to hold here and break back up. But we're very, very, very weak on the downside. So I'm expecting possibly another drop to come out of the mining sector, this GDXJ here. Let's look at the SILJ as well too. And look at this here. This is the one that I talked about from the intro on this video, right? High, lower high, lower high, lower high, lower high. And if we're trying to pick a bottom, this is where trying to pick bottoms in markets is never a good idea, right? It's like, oh, the bottom's in, 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 oh, the bottom. You see what I'm saying there, right? It's like, just wait for the market to turn around. Wait for if this is going to be but John, it's a double bottom. right? If it is going to be double bottom, wait for the market to at least break above, so it's no longer making lower highs, right? Because as we're making lower highs, the sellers are still low. The sellers are still in a downward trend, and we never want to be fighting that, right? It's lower high, lower high, lower high. At least waiting for a break above that high, and then potentially start to capture an up move from there. If you try to capture this move here, this whole move down through here is not a good idea. Now, this is for trading purposes, guys. If you're investing, I mean, you're buying for 5-10 years, different story from there. And then moving over now through to the SIL as well too. And we can see here from an SIL perspective, well, actually this whole SIL really interesting, right? $25.50 is a very strong level of support in the past. And then now we became strong level resistance, and now we're breaking down. What does that mean? That means a few things. One, we still are in a downward trend, right? Lower high, lower high, lower high, lower high, lower high, right? So we're still getting that, and we're still rolling over. And we also can see that if we do break below $22 level, next level of support, it's at 16. Poor, right? So the mining sector is still in a strong downward trend right now, so we don't want to be fighting against that. Now, if for any bullish scenario, what would we want to see? Remember I said before, if it's making lower highs, we want to stay away from it from a bullish perspective anyway. We want to see at least a breaking above a high, right? Lower high, lower high, lower high, lower high. So if this is going to start to turn bullish here, we would get a higher low and a break up through there. Right now, we are not getting that in the market. So we're starting to get there's starting to be a lot of weakness in the market from here, from that perspective from there. Let's go look at the bond market here. And a really big thing about the bond market, the TLT and TMF and those sort of markets, is a few things. Firstly, where's the moving average? Where's my moving average? What? It's strong trending on the downside, right? Strong trending on the downside. So trying to go against this is very, very, very risky. We're still in a very strong downward movement from here. So trying to go against this is very, very, very dangerous in the markets.